Hello everybody, and welcome back to another video. This is going to be a combination of multiple tools that I utilize as an ICT trader to give me high probability conditions, to give me high probability setups, to give me high probability trading, and to have, most importantly, confidence in my abilities as a trader. Getting right into it, we're going to review some of the price action that occurred today, which we know is the CPI release day this morning, okay? What are the key takeaways from today's session that we are going to walk through? The benefit of identifying engineered liquidity, session highs, session lows, utilizing key opening prices to form bias and frame trades, how we can identify the manipulation phase and use it to our benefit, significant inefficiencies, how to identify them, what are they, how to utilize them in our narrative, in our trading, in actual trade setups, in identifying order flow. There's so many ways to utilize significant inefficiencies, and we're going to talk about them a bit here. Time distortion, which is extremely important, and as you guys all know, my favorite, macro power of 3. So getting right into it, we're going to rewind here and look at where price was at 9 a.m. This is 9 a.m.'s hourly candle, so really this would be 9 a.m.'s candles close, right? But the emphasis here, as we're going to see, I'm going to add some annotations and see how we can build a narrative. So if we're looking at what we're doing at 9 a.m. and we move to the next slide, we can start to build a narrative, okay? This is the 8 a.m. candle. That CPI releases at 8:30 a.m. Eastern time. And we can see that upon that CPI release, price initially went up, but what did it do? Did it purge this high here? No, it did not. It fell just short of that. Now, yes, relative equal highs, whether it's 2 relative equal highs, 3 relative equal highs, whatever, in close proximity to each other is significant and a strong draw on liquidity, especially when it's in line with a higher time frame direction and your bias. But when it's a session high, you guys know how much I love targeting session highs and focus on targeting session liquidity. When we have a liquidity pool, especially after a red folder news release as big as the CPI news event, that brings price up but falls just short of a session high, which in this case is previous day's high, that is engineered liquidity, and your focus should really be on there, okay? So to start building your narrative, you're saying, okay, I don't want to gamble news, so you shouldn't be in this move at all. But you want to see what occurs initially with that news and then what stage 1 is of that news manipulation. So looking at this news event here, and of course we're going to dig down to the lower time frames and look at the delivery, but you're saying, okay, we went up, but we failed to purge yesterday's high. So there's still a large liquidity pool up here above yesterday's high, and now the engineered buy side liquidity falling just short of yesterday's high. On top of this, what you see in this price fractal, after we leave behind that engineered buy side liquidity, which is what we want to see if we're trying to frame a long, you want to see as much engineered buy side liquidity be left behind. After we see that occurring, we want to see what? The manipulation phase. Where is that going to occur? Below old lows. And what do we have here? A session low. So we're leaving behind engineered buy side liquidity and a session high, and we're sweeping a session low. So we're starting to see and build a narrative that we want to see for a potential long scenario. If we continue forward here, let's add key opening prices. First and foremost, we're going to look at midnight's opening price. Where are we with this 9 a.m. candle in relation to midnight opening price? We are below that key opening price level, okay? That is best case scenario for a long. So we're still utilizing the key opening prices as a tool to build your narrative. You're still saying, okay, we left behind engineered buy side liquidity. We're sweeping session lows. We're below midnight opening price. We're starting to build a bullish narrative. Continuing forward, cherry on top, what is this right here? This is a BISI, or a bullish fair value gap, okay? In other words, it's a discount inefficiency. So we're seeing price go below midnight opening price, leaving behind engineered buy side liquidity, sweeping a session low into a discount inefficiency. So the stage is set for a reversal and for a long setup. So let's continue forward, and now we're going to take a look and dig into the 1 minute time frame. So as you can see here, and with my annotation here, we're looking at and focusing on the manipulation phase on this lower time frame, and more specifically after the 930s open. So this little gray line dragged out here, that is 9:30 opening price. Best case for a long setup, just like we just discussed with midnight opening price, we're utilizing that same logic for 9:30 opening price. We want to see price go below 9:30's open and do what? Sweep sell side liquidity. That's what's happening here. We're sweeping sell side liquidity here. We're sweeping lower time frame sell side liquidity here. And just like we discussed, because price is fractal and we're internalizing this order flow in price in general the same way, regardless of time frame, we want to see for a long as much engineered buy side liquidity left behind while the manipulation phase is occurring. So again, with the annotations, for manipulation, you want to see sell side swept. You want to see price go below 9:30's open. You want to see them leave engineer buy side liquidity. And on top of what we're seeing here with the lower time frame, you're still aware of everything we discussed in the first few slides on the higher time frame with engineered buy side liquidity in relation to previous day's high. As you can see here, this is that 8:30 news release, CPI. It's falling just a couple points short of that daily high here. Okay, so if we continue forward here and we're trying to identify a turning point or a reversal, now we're entering the macro window. So we see price very quickly go below macro opening price. And in scenarios like this, where you're looking for macro power of 3, if we see clear sweep of sell side liquidity right before that macro opening price, and then you start to see price reverse here, you probably won't get that macro power of 3 where it's going to go down once more and sweep the sell side liquidity because the manipulation has already occurred. Okay, so while we enter this macro time window, again, 9:50 to 10:10 a.m. Eastern time, you're saying, okay, we still have the engineered buy side here. You still have the engineered buy side all the way up here at yesterday's high. We have sell side swept. Now let's see if price starts to do what? Close above premium PD arrays as confirmation of a potential reversal. Okay. Higher significance because what? We're in that time window, right? As ICT traders, we don't just look at price patterns. Time is the major advantage. We know when things are more significant to us, when certain signatures are more significant to us, certain setups should be higher probability, right? So we see price come down here, sweep this sell side, and initially start to close above this SIBI, right? Closing above a premium PD array. Not marked out here, but what is price doing as well? Closing above this premium PD array, closing above this premium PD array. We went below 9:30 opening price. We swept sell side liquidity. We have a lot of buy side liquidity left to target. So you're continuing to build a narrative and internalize order flow. Okay. If we continue forward, recall the discount inefficiency from the first few slides on this call tonight. Okay. This is that hourly BISI high that we had marked out, right? So you can see that during this macro window, the algorithm is referring to this higher time frame key reference point. So you're seeing the footprints of a reversal. And then also after the reversal occurs, you're seeing what price is respecting, right? In terms of support here. And you're utilizing your hourly fair value gap high. So it's important, yes, of course, what is occurring on the lower time frame, but you still need to be filtering through the higher time frames and saying, okay, are we within a higher time frame inefficiency? If so, where are we in relation to that higher time frame inefficiency or PD array? Okay, you want to know these reference points that the algorithm is going to refer to, especially again, guys, the takeaway here is because it is during the 9:50 to 10:10 macro window. Now, it doesn't have to be this specific 9:50 macro window, but put your emphasis on everything is going to increase in terms of significance during these time windows. Okay. Continuing forward now, significant inefficiencies, the news fair value gap. You're looking at if price is down here, whether you enter here on this lower one, you have a great entry, the second one, the higher one, this BISI, right? This can be a balanced price range too. Take your pick, right? But what is standing in the way from price down here and the terminus, previous day's high, the engineered buy side liquidity externally? This significant inefficiency, the news fair value gap. So in terms of confirming order flow, and identifying if you're on side, if and when price delivers back up to this news fair value gap, you need to see us close above. You need to see a willingness for the algorithm to send price above and close above here on this 1 minute time frame, the news fair value gap. And of course, as you can see here, by extension as well, the new day opening gap, you want to see us get above that as well. So the new day opening gap and the news fair value gap are two things standing in the way from our entry and where price is on this turning point here. and yesterday's high, our terminus, our final target where we want to see price deliver to, okay? If we continue forward, let's talk about time distortion. Now, time distortion is extremely significant. So let's rewind a bit. If our focus with entries and just what we see in terms of price signatures being increased in significance during these 950 to 1010 macro windows, again, 1050 to 1110, just the macro windows in general, if these are extremely important, what occurs in these windows, flipping it around, we know that time distortion or lower probability conditions are more likely during and between, I should say, those macro windows. Okay, so if we have the 950 macro and then it ends at 1010, after that until the next macro, which of course is 1050, these conditions are lower probability for entry. So does this mean that I'll never enter a trade in between here? No, of course not. But if I'm not seeing a clear as day high probability setup, an SMT, a high probability inversion, you guys know how I enter price and engage with price and just read order flow and what I deem significant, high probability, etc. If I'm not seeing clear signatures and clear trade setups present themselves, if I'm not already in a trade down here during this time distortion window, 1010 to 1050, I'm saying, okay, there's nothing clear to me. And I also understand that we're between macro windows. The best thing for me to do before just putting on risk for no reason because I'm impatient is to wait for the next macro window to see if a high probability setup is provided because we understand the significance of time. As you can see now, we enter that 1050 macro window. And notice how we just chopped around during that period where time distortion was more likely between macros. We're stuck between the 1 hour BISI high and we're stuck between the news fair value gap. But now, as we enter the 1050 macro, we want to see the algorithm start working. So what does it do? We come down, sweep sell side liquidity here, sweep sell side liquidity once more in relation to this lower time frame swing low, okay? And then we start to return back up and close above this SIBI and this SIBI as well, okay? This SIBI is significant. It's a high probability bullish inversion. Its initial state of delivery was to sell side. It was bearish because it used to push price lower. Even though it was just this small fractal of price, it was utilized, and you can see this, and this is the benefit of staying patient, okay? It was utilized to push price lower and sweep sell side liquidity during a macro. After we close above it, that's the change in the state of delivery. The algorithm is offering smart money setups during this macro window. So it's time and price, guys. And look at where we're going while this manipulation during the macro is occurring. Below macro opening price. MO, macro open. If you ever see that on my charts or anyone in my group's charts, that means macro opening price. Okay, if we're bullish, best case, we want to see price go below that macro opening price, right? It's just a refinement of the framework and how we utilize 930's opening price when we're bullish and how we utilize midnight's opening price when we are bullish as well, okay? And we see that manipulation taking place during the macro window below macro opening price. But still, after you're seeing this turning point, right, the manipulation take place and then this closure above the SIBI, classifying this as a high probability bullish inversion, what do we need to see price do? Close above the news fair value gap. And when it does close above the news fair value gap, what do you want to see it do? Offer support, be a high probability bullish inversion, okay? Recall from earlier in the charts, and I'm sure you guys were watching this price today, right, on NASDAQ. The news fair value gap, it's significant in and of itself, but also it was utilized to send price lower, just like this fair value gap was utilized to send us lower here. So see how we're utilizing certain inefficiencies to internalize price, but it's just the same way, right? So this is the news fair value gap. It's important in and of itself, but it was also utilized to send us lower. So its significance is increased even more. We close above it. We want to see price close above the new day opening gap. We do, okay? And we extend to yesterday's high, okay? So I hope you guys got a lot out of this video. As always, let me know if you guys enjoyed this video in the comments. Let me know if you guys have any questions, okay, in the comments as well. Be sure to like, subscribe, yada, yada, yada. We have a lot more teachings coming soon. If you guys want to join my group, that link is in the description, and I hope to see you guys in there. As always, stay safe, good luck, and good trading.